Student question, we've got a bunch of transactions here. July the 1st, a firm purchased on credit from our supplier some stock. July the 2nd, bought some more stock from a different supplier. July the 3rd, bought some more stock. All these are on credit. We can see they've all got invoice numbers, which implies credit. And July 4th, the firm purchased more stock on credit. The question we've got is, how do I record these transactions in the purchaser's journal and the general ledger? Let's have a look at what the background knowledge that we need to know. We need to know the journals and what they do. So there's 4 special journals. We've got the cash receipts journal for all the money that the firm gets, the cash payments journal for all the cash paid, got the sales journal for all our credit sales to customers, and we've got the purchases journal to record all credit purchases of stock. We also have the general journal to catch anything else. So that's going to record all the transactions that just don't belong in the other 4 special journals. The one we're dealing with right now is the purchases journal. We've got stock that's been bought on credit and we're going to record that. Let's look at how we do that. So just using some different data as an example, we put the date, we write the name of the creditor's invoice number, the amount of stock, GST, and the total in creditor's control. What I need to remember is the total that goes in creditor's control must equal the total of the stock and GST columns. That has to equal, because stock is a certain figure, GST is 10% on top of that, and that's how we get the creditor's control figure. We then go and enter all the rest for the remainder of the month, and then at the end of the month we total it up. And the first thing we want to do is just do a little check. We can do this in Excel if we're doing it with the formula, but we just want to make sure that the total of the stock control column added together with the total of the GST column equals the total of the creditor's control column. And if it does, that's a good sign that we've done everything correct. We then need to post that. So what does that mean? It means we post it to the general ledger. So we've got 3 numbers here. We only worry about the totals when we're posting to the general ledger. We've got $6,200 in the stock column. So we're going to do a debit there. In terms of the duration, we'll just leave that blank for now, figure out what to do in a minute. We've got the $620 in GST, so this is where we've been charged GST, so that would decrease our liability, so that is going to be a debit, and again we'll leave our reference blank. We're also posting on the last day of the month. We always do that in the general ledger. And lastly, we've got the stock, the creditor's control figure of $6,820. That's going to increase our liability, so that would be our credit. Now we've got our debits and credits, we can go and match up our references. So in stock control and GST, we're going to write the name of the other ledger, which in this case is creditor's control. And in creditor's control, we're going to write a double reference, stock control / GST clearing. So we know that now. Let's go and record our credit purchases for this question. So the first one we've got is we bought on credit from our supplier Jesse James $10,000 of stock plus $1,000 of GST, and we've got an invoice AZ234. We'll go the date, we'll put the creditor's name, we've got the invoice number, and then we'll put in stock, $1,000 in GST, for a total of $11,000 in creditors. Next one, July the 2nd, the firm purchased on credit from Apple Limited $22,000 of stock. That includes GST, and we've got the invoice number there, so I'll put the date, the name of the creditor and the invoice number. With this one, we've got $20,000 in stock and $2,000 GST, and that's because we want to get $22,000 as a total, because we're told that's what it is including GST. So we've taken GST out of that by dividing by 11, and that gives us the stock control figure there. July the 3rd, we've bought more credit from Jesse James Limited, $11,000 of stock, including GST. So we're going to use the same approach. We'll put $10,000 in stock control, $1,000 in GST, and $11,000 in creditors. Lastly, July the 4th, we bought on credit from Apple Limited, again $11,000, and again that includes GST. So we put $10,000 in stock control, $1,000 in GST, and $11,000 in the creditors control column. All we've got to do now is finish this off and total and post the journal. So we're just doing it to the general ledger. So first of all, we just total stock control and we get 50,000. We'll total GST and get 5. And then we'll total creditors control and get 55. So before we do our posting, we'll always go and check that that adds up. So we'll add stock control of 50 plus GST clearing of 5,000 equals a total of creditors control of 55,000. And by doing that check at the end, that saves us a bit of time, especially during an exam. We don't have to go and add up every line one by one and do a check individually. If we just do a check at the end, that's a good sign that all the other transactions are going to be correct. What we're going to do now is post that. So let's say our stock control ledger had a balance of $130,000. That information wasn't given. We're just going to make an assumption here. We now need to go and post the $50,000 of stock in the purchases journal. So that represents stock that we've bought. That means we've got more stock. That means we need to increase an asset. So that would be a debit. We'll leave our reference blank for the moment until we get to the end. Next one, we've got $5,000 in GST clearing. We've been charged GST, so that lowers our liability. The liability goes down on the debit side. Again, we'll leave our reference blank. And lastly, let's go to the creditors control ledger. Let's assume we've got an opening balance in creditors of $140,000. That information again wasn't given. We're just putting a figure in there so it looks complete. We now need to increase that by $55,000. When we increase a liability, that becomes a credit. Now that we've got all our information, we can go and put in our references. So in stock and GST, our reference will be creditors control. So we don't want to write creditors, we want to write creditors control. That has been picked up on the exam before, so we just want to make sure we write that in full. And in creditors control, we want to do a double reference of stock control / GST clearing.